This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now from the IARN studios in Des Moines, here's Mark.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Tuesday, December 3rd, 2024, and we're so glad you could join us for today's show. In today's episode, we will have our closing markets with Ross Baldwin of agmarket.net coming up later in the show. And now it's time for my interview with Robert Cossar of CROPLAN. We're going to talk about starting the season off right by getting your seed selection correct. You're watching Ag Matters PM.
Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm joined today by Robert Cossar. We are at CROPLAN at the NAFB Trade Talk Show 2024. Robert, first of all, thanks for taking the time to join me here today. Let's talk about the most important part of farming for many people, the seed. When you put it in the ground, you want to have that right seed. How does CROPLAN help customers with that, getting that right starting point?
Yeah, it all starts with seed, right? That's the first decision we make of the year is the seed decision. So at CROPLAN, we take some unique approaches. It's all about yield. It's about performance at the end of the day. It's about bushels across the scales, as I like to say. But it's how do you get there? How do you decide on that one hybrid or that one soybean variety that goes on that farm? And it's really, it's about yield, but we look at how we manage that as well. And so we have what we call answer plots across the U.S., several there in Iowa as well. We're looking at testing genetics for performance. We're also looking at how to manage those. And we call that our characterization trial, or how do we look at response to nitrogen? How does hybrids respond to fungicides? How does hybrids respond differently to population? And so we're able to take that information and really help growers place the best product on the farm for their highest ROI potential. Not every acre is the best acre. There's medium acres and low-end acres, so we are able to use that data to help us decide which hybrid should go on that farm.
And does that also zoom down to the very micro level? Do you help farmers with individual fields, individual parts of their operation, getting that right seed, or is it just for their overall operation?
It's down to the very specific field, right? And some growers are even doing multiple hybrids in a field. Now, that's very rare, but there are some doing it. But it all comes back to that local retail agronomist. That's where it starts. That's the person who has the most intimate information and the relationship with that grower, but also the knowledge of that field. And so that retail agronomist takes that data from our answer plots and says, here's the hybrids we want for this field that's going to fit. And like I said, if growers are able to change management styles for that, we can. But we like to select the hybrids that fit their management styles versus trying to change their management to fit a hybrid. Because a lot of times we'll get a great plot-winning hybrid, right? It won the plot, great, but I managed my farm or that field differently than that plot did. So we use that information to help us to really decide the hybrid that fits the management style and the yield potential of that field.
And so are like you mentioned, the regional agronomist really helps to connect with the farmer to not only have that seed be the right seed, but to reach the maximum potential for the seed is kind of the end goal, right?
Right, yeah. So it starts with the seed, but then you got to manage it through the season. So it's the fertility inputs, right? What's that local retailer managing for a fertility standpoint? It's crop protection, how we're protecting that yield. The maximum yield is in the day you open the seed bag. Then it's protecting the yield all year, and that's where crop protection, that's where fertility comes in. That local retail agronomist can really help dial that in for that grower.
Is there anything else that would change when we're in a time like right now with depressed commodity prices for determining seed and exactly the right variety for a grower?
You can't, when low commodity prices, it's easy to say I want to pull back everything because you got to protect, right? You got to protect a little bit of the cash flow. But we know that if you start pulling back to lesser yielding genetics, then you give up cash as well on the backside. So we really don't change anything on selecting the genetics. But that's where that information of how to manage that hybrid from that local retail agronomist comes in, because they're able to pick and choose which buttons to push and which point things to pull back on in season to help the grower achieve the highest ROI. It's not about the highest yield, it's about the highest ROI on the acre.
So we're here in mid-November, but of course it's never too early to start thinking about the next season. And what are you excited about for 2025?
So we're really excited about the CROPLAN brand. It's just a phenomenal performance this year. We just had an advancement meeting last week where our product management team released 8 new hybrids, ranging from 92 up to 119-day hybrids. So one brand new Smart Stacks, 4 VT4 Pros, some Nutriceptas and Double Pros. So really excited about the brand and the portfolio from a corn standpoint, but also soybeans. Soybeans, and I can't leave out alfalfa, which, Harvextra trait is just phenomenal. And so we have a wide array of offerings for growers for every acre, but really excited and truly proud of the CROPLAN brand and what it's able to bring to growers on their farm.
Robert, is there anything else you'd like to let our viewers, our listeners in the state of Iowa, our Iowa growers, about what you're excited about, or just anything in general they should be thinking about going into next year?
Yield potential is always right, and we talk about cropland performance. The other thing we were started talking about a couple years ago is how do you help growers make those input decisions, but also manage some of that risk. And that's where the Advanced Acre RX program comes in. It's something we introduced several years ago. And we're asking growers, we know when we ask growers to spray a fungicide, right? That's an input decision they're making that could be several dollars per acre their investment making. So the Advanced Acre RX say, hey, it's an agronomic-based program that you and that local retail agronomist sit down and decide which inputs need to be on an acre. But it's also a risk mitigation because we're going to stand with you on those decisions. And if you achieve the yields, awesome, that's great, that's what we want. If something happens, you don't achieve yields, there's a risk mitigation here from a warranty standpoint that we're able to help that grower going, hey, you didn't achieve the yields, so we're going to give you some money back on those acres. And so that's a local program that we work with. Like I said, a local retail agronomist really helps that grower decide if that's the right program for them. But excited about that because in low commodity prices, we all want to pull back, but this program allows you to still push some acres that you want to push, but have a partner there standing with you to mitigate that risk.
He is Robert Cossar with CROPLAN, my guest here today at Trade Talk 2024. Robert, thanks so much for the time. Very informative talk here today. Appreciate it, and have a great rest of the show.
Thank you, Mark. Appreciate it.
Thank you once again to Robert Cossar of CROPLAN for joining today's show. Coming up next, it is the closing markets. I will be joined by Ross Baldwin of agmarket.net. But first, it's time for a word from our sponsor, the Iowa Soybean Association and the Soybean Checkoff.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
You're watching Ag Matters PM here on the Iowa Agribusiness Radio Network, and it's time now for the closing markets. I'm joined by Ross Baldwin of agmarket.net. Ross, it was a little bit of a quiet day in the ag marketplace yesterday. Did that continue today? What did we look at with the trading in the grains?
It was a quiet day of trade, and to be honest, the month of December a lot of times is very quiet, especially as you get past Thanksgiving, you head into the holidays with Christmas, and it's generally a quiet month of the year. But December corn was a penny lower today. March corn was a quarter of a penny lower. You still got a little bit of contracts getting rolled out from the Dece out to the March as we are in delivery with the December contract. Over in the soybean market, beans were 6 1/4 higher on the January. The March contract was 6 3/4 higher. Meal was $2 higher. Chicago wheat was 7 1/4 higher, and Kansas City wheat was 2 cents higher. So I mean, all in all, it was a quiet day. Not a whole lot on the news side of things in the grain markets.
And Ross, when we talk about soybeans, yes, I know they were to the positive side today, not a huge jump, but obviously some positive price movement to the upside. How do you take that into account based on everything we've heard, the good weather reports in South America and, what they've been able to do with planting? How do you square that away?
The thing with the South American weather is it remains ideal. And there's a lot of estimates that are coming out of private analysts that think that soybean crop, I mean, you're pushing 170 million metric tons. Some of those guesses are that high. There's even some in the low 170s, that's a very big bean crop. We did have the NOPA numbers, crush numbers out yesterday, and they were massive and record large. And that's no surprise as you've got all these new crush plants online, but we do have good demand, which we need to. I mean, with all these crush plants online, the NOPA numbers are going to run high, but at the end of the day, we need to see demand remain strong. We didn't have any new export sales here this morning on the corner bean side of things, but it's really quiet. I mean, on beans, I think the market's just kind of in a wait and see mode. As we talked about, it's quiet this month of the year. Usually the WASDE report, there's nothing that comes out of the December WASDE, and it's more the attention turns to the big Jan WASDE quarterly stocks report. But I think if the weather stays good in South America and you get out past the first of the year, and I think if there's a lot of people that are still thinking the soybean market has a lot of room for downside, and I don't disagree with that, but I think you're probably pushing out into mid to late January when we know more of a definitive answer on the South American crop. You get out into late January, February, and if the weather's still looking good and they haven't had any big issues, and you're talking a 170 million metric ton crop down there, I think you do have the potential for beans to work lower. Corn, very range bound. Corn still, you got to carry out a little under 2 billion bushels. Corn's pretty neutral, but I think corn does have a little bit just of a story around ethanol grind has been really good. Corn exports to Mexico have been good. Corn, I think, has more of a risk to the upside, but I still think March corn's probably just in a trading range of 420 on the low end to 450 on the upper end of things. And here we sit at 430 today. We've held 425 here as really good support lately, but I just think the corn market is going to remain awfully range bound, can likely work higher just based on strong demand, and the bean market likely range bound with a little bit of risk to the downside based on favorable South American weather.
So mostly green on the grain side of things, apart from the corn. Let's go over to the other side of the market in the livestock complex. Did we have green on the screen there today?
We did across live cattle and feeder cattle. Live cattle, December was 95 cents higher. February was $1.15 higher. January feeder cattle, they were about 250 higher. March feeders were $1.72 higher. Over in the hog market, hogs, they did, February was 10 cents lower, reversed off of the early morning highs. We ended the day about $1.30, $1.40 off of those highs. Over in hogs, that 89 to 90 range has really been stiff resistance. Now, the thing with hogs is they've essentially done nothing but rally since going back to August, as the hog numbers have been tighter than what the USDA was saying, and the managed money crowd has just stood in here as hogs have had a favorable story, and they're all-time record long hogs. The COT report that we got to see yesterday, it was delayed from last Friday due to Thanksgiving. It showed the managed money crowd added back to their hog length, and they're long a little over 130,000 contracts of hogs, which is all-time record. So I think you got to respect when hogs have a reversal like this. This is the second reversal we've had in the last week off of this mid 89 area for Feb hogs. So I think you got to respect that given the length this managed money crowd has. The fundamentals, they remain supportive, but when you get this kind of length out here and these kind of technical reversals, you certainly have risk to the downside. Cattle, they had a sell-off yesterday, really based off a headline that Tyson is going to be closing a beef processing plant that's in Emporia, Kansas here after the beginning of the first year. The market, the algorithms took that headline and sold the market off pretty aggressively. At one point, live cattle were $1.50 to almost $2 lower. Feeder cattle were almost $4 lower. And as yesterday, we closed well off the lows, but then I think as people started, or the algorithm started figuring out, that was only a beef processing plant. That plant has not killed any cattle since, I believe, 2008, around there, around the 2010 era. But it's just a further beef processing plant where they do marinated meats and stuff like that, further processing. And so today we walk in and the market's back up $1 and feeders are back up 250. Now, similar to hogs, they unlike hogs, they closed green, but similar to hogs, we did close well off of our highs, and the funds are a big long in live cattle and feeder cattle. They're long about 15,000 feeders and 120,000 live cattle. Those aren't small positions. So we've priced in a lot of bullish news here recently with the New World screwworm shutting down the border for feeder cattle imports out of Mexico. That happened 2 weeks ago. We've rallied off of that. We've rallied off of cash trade being higher. Cash was 2 to 3 higher last week. And so when you get the funds this long, similar to hogs, I think you got to be mindful of the risk that's out here, and there's substantial risk to the downside if something were to come out, just like yesterday, the headline we seen that the algos grabbed a hold of that, hammered the market, and it it wasn't a big headline. I mean, it's not going to change the cattle market from a slaughter standpoint, but you can just see when they get this much length out here and at these price levels that we're at, if you were to get more of a meaningful headline that were to stick, this market, I mean, at these levels and this kind of fun position, there can be significant downside. So just be mindful of all that across the protein space. I mean, there's big fun positions and these are big prices that we're at. So manage your risk and just kind of be mindful for a lot of downside.
Ross Baldwin of agmarket.net. For our producers who are listening and want to get in touch for more marketing information, how would they do so, Ross?
You can reach me at our office here in Anthon. Our number is 712-373-3276, or you can visit agmarket.net to find more about ag market.
Thanks so much for the time here on the closing markets today. Appreciate it and have a great rest of your week.
Thanks for having me, Mark.
Thank you to Ross Baldwin of agmarket.net for our closing markets here today. Let's take a look at how the closing numbers wrapped up here today, as you can find those numbers anytime under the market tab of our website at iowaagnet.com.
March corn closes down 1/4 cent at $4.32 1/4. January soybeans up 6 1/2 at $9.91 3/4. January soybean meal up $2.50 at $2.90.40. January soybean oil up 72 cents at $42.14. Chicago wheat up 1/4 cent at $5.47 1/2. Minneapolis wheat up 9 even at $5.69. Kansas City hard red wheat up a penny at $5.24 3/4. March oats up 11 1/2 at $3.80 3/4. On the Merc, December live cattle up 95 cents at $188.47. January feeder cattle up $2.45 at $259.30. December lean hogs up 2 cents at $83.25. December pork cutout unchanged at $92.50. Class 3 milk up 23 cents at $18.74.
That does it for our closing markets on today's episode and brings us to the end of today's show. You can find all of our content on our website at iowaagnet.com. You can also subscribe to our YouTube channel. Click on the notification icon as well to let you know whenever we have any new videos available to view. You can follow us on social media at Facebook, X, TikTok, and LinkedIn. And you can listen to our morning, midday, and closing market podcast wherever you find your favorite podcast at Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.